The question that everybody wants to know is, after this restructuring, what does Deutsche Bank look like?
Well, there isn't that significant a shift in terms of strategy for the company. We aim to be a corporate-led global investment bank based in Europe with global reach. There is a rescaling, if you like, of our ambitions, particularly internationally, and if you like, a discipline in terms of the focus, making sure that our activities in the U.S. and to some degree in Asia align with that European core.
Okay, let's focus on the U.S. for a moment then. Let me ask the same question, but with a U.S. focus.
Sure.
What does the U.S. business look like after this restructuring?
Well, obviously smaller. We pointed out the leverage exposure. We have really an inefficient use of the balance sheet in certain of our business in the U.S. So the starting point is to reduce that leverage exposure. The other strategic discipline here is making sure that when we are present in an activity in the U.S., it has to have some connection with the real unique selling proposition of this company, which is that we're the leading European investment bank with global reach. So to the extent that there are activities in the U.S. that fall outside of that perimeter, that's where you'll see us take some action.
You wouldn't care to mention some of those activities that you feel fall outside that
We don't
perimeter?
want to be too precise about what that means, but there's some obvious candidates that will fall out. And so that means rescaling a little bit in the U.S. and acknowledging that we can't compete against our U.S. brethren in terms of scale in every business, product, market, client segment in the U.S.
We reported the other day at Bloomberg that it was cash equity was kind of the main area that you were going to be withdrawing from. It seems bigger than that.
That was speculation, and what we've said is that we were putting the equity business under review. We want to be quite careful there to measure twice and cut once. The equities business is a global business. The three elements of that business, cash, derivatives, and prime finance, do have interconnections. So we want to make sure that we're very deliberate about the actions that we ultimately take. And again, it's about ensuring that we can defend our European core where we continue to have a leadership position.
How do you keep good staff during this process? You just hired a new head of equity.
We did.
His entire business is now under review. Is he going to be around? How do you keep these kinds of people?
Yeah, he's a full participant, obviously, in the work that we're doing to think about reshaping our equities franchise. We've also hired recently in Europe at a senior level. He's completely committed to reshaping the franchise together with Christian and the management board towards what is a sustainable equities business, again with global reach, but one that leverages our core strengths in Europe.
Don't you, though, worry that by not delivering specifics, you've announced a strategy, but you haven't delivered specifics. Therefore, if I'm sitting within one of those businesses that potentially could be at risk, I'm on the phone.
You want to move quickly in a restructuring like the one we announced this morning to give as much certainty as you can to our people, that is our employees, obviously our clients. But at the same time, again, measure twice, cut once. So the premium is on quick and decisive action as we go through this restructuring, acknowledging that there will be some friction costs as we go through it, whether that's uncertainty among employees, among clients, and potentially some loss of revenues.
So when do you have the numbers upstairs that you could give us? Do those numbers exist? When do you think the specifics are going to start to emerge?
We've obviously analyzed the decisions that we've made in great detail. Some of that is clearly estimation of what we think the future can look like and the impact of the actions on revenues, on expenses, on capital usage. Our hope is that those assumptions are conservative and that we can outperform our expectations. But we've measured those the affected businesses and the impact of the actions, and now the focus is on execution.
Have you learned a lesson from the past, which is don't give the market numbers? Because if you give the market numbers, they tend to shoot at them, and if you don't deliver upon them, that's a problem.
We'd much rather underpromise and overdeliver, and be measured on the things that we do rather than the things that we say. We'd like to be out with proof points over time, so that when we engage with the marketplace, it's to tell the market what we've done and what the impact of these actions is in fact, rather than, in spreadsheets.
Are you willing to accept that you're allowing the market to work with assumptions at the moment? You're comfortable with that?
We are. I mean, obviously, we will engage as we have, more detail to share. We'll engage with the market because we recognize that that people want to get the details. Analysts want to build those details into their models. Staff obviously will be communicated with, and we do every day communicate with our staff. But the driving assumption here is to build a more sustainable, higher margin business, more profitable in terms of its return on balance sheet usage, return on equity. And so the decisions we've made are aimed at doing that, and our analysis suggests we're on the right path.
So to circle back, I've heard you talk this morning about kind of you want to be Deutsche Bank. Is Deutsche Bank significantly different in 5 years' time from where it is now? You talked about this move back to Europe. Why did it take so long to get here? What was it that provided an opportunity to try some of these businesses out, to push harder in the United States? It wasn't that long ago you were talking about kind of expansion in the United States, trying to make profit in the United States.
Yeah.
I'm kind of wondering how this process has evolved internally.
So, I mean, if you go back in history, in the immediate post-crisis period, there was an opportunity to make money in areas of the businesses where the U.S. banks had retrenched a little bit and Deutsche was on a firmer footing. I think that caused us to continue to invest resources in those areas that we were good at, and among other things, we were able to compete with based on leverage. And that caused us to be, I think, a little slower than some of our peers to adjust to the post-crisis environment, to adjust to the impact regulation would have on the industry. And that's clearly something that we have to do now. We've seen the impact of past regulatory changes, and also regulatory changes that are coming at us, notably Basel III sort of final framework. We need to clearly adjust our business models to reflect that.
Final quick question. The comparison is often made with US banks. Is that a fair comparison, given the regulatory difference that now exists?
Our home market is obviously Europe. There are some differences in regulation between Europe and the US, and there are obviously significant differences in terms of the structure of the markets, the margins that are achievable in Europe, particularly in anchor businesses like retail and commercial banking. And that's something that's a reality about our company and a reality about the scale with which we can compete with the U.S. banks. And so some of the announcements today are a reflection of that reality. And as I say, we rescale ambition to the bank that we want to and we can be in the future.